did we stop investing in stocks because there were a lot of scammers in, the 1920s? No. How about in the 1970s when we had the savings and loan crisis and, I guess it was 1980s and the savings and loan crisis and, we stopped investing in stocks? No. Or how about the global financial crisis when the big banks, right? The banks that we trusted were scamming us with CLOs and CDOs and slicing and dicing, the big short. Nope, we didn't stop. Yep. And yet when people talk about crypto, they're like, oh yeah, you had a bear market last year. Like, yeah. And year to date, this year, it's up almost 100%. And it is again for the 11th out of 14. It's only been in existence for 14 years. Bitcoin's only been an asset for 14 years. And 11 of those 14 years, it's been the number one performing asset.
Mark Yusko, the founder and CEO of crypto hedge fund Morgan Creek Digital, remains firm in his prediction of an upcoming bull market for digital assets. While his initial call for a crypto bull market to begin this month was premature, Yusko now believes that a crypto summer will likely kick off in mid-June. His optimism is partly based on Bitcoin's current market performance and the potential reversal pattern it is exhibiting. Despite flat performance over the past year, Yusko finds the resilience of Bitcoin intriguing, especially in the wake of regional bank failures. He suggests that these failures might have been orchestrated to facilitate the seamless adoption of central bank digital currencies, emphasizing the dangers associated with CBDCs and how Bitcoin addresses those concerns. Watch the video to hear Yusko's insights on the bank crisis, historical resemblance, and his thoughts on the orchestrated nature of these events.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The banking crisis, remember Yellen, like 4 or 5 years ago, said there'll never be another crisis in her lifetime? Mm-hmm. And then someone joked and they said, well, she's almost, expired anyway. Like, well, okay, that's not very nice, but okay. But I mean, just clearly silly, right? I mean, it's cyclical and, as sure as the sun sets and rises, there was going to be another financial crisis. And we have one going on. The more people say it's contained or it's over, the more it's not, right? So, first you had Yellen say it wasn't going to happen, and then it happened. Then you had Powell say, well, it's totally contained. And then 2 more banks failed. And then you had the president say, definitely perfectly healthy. Everything's good. Nope. So, because what hasn't happened yet is the loans. So the first thing that happened is the banks had the crisis in 2009. And what happened? Fed lowered interest rates to 0 and said, all right, we'll re-liquefy the banking system by lending you money, okay? And you take that money. So we'll lend you money for 0. You take that money and you buy bonds, okay? Government bonds. Okay, now why would they do that? Well, because it was a free arbitrage, right? If you borrow at 0 and you get paid 3, you can lever that up 10, 11, 12 times and you make a lot of money. In the early 1900s, this thing called Knickerbocker Trust started to really surge in New York. And there's a famous quote that JP Morgan himself said, I like a little competition. And he spread a rumor that Knickerbocker Trust was bust. And if you go to Wikipedia and you look at the picture of bank run, you'll see the picture of the Knickerbocker Trust and the, people with their umbrellas and their top hats and, running to the bank. That's a bank run. And Knickerbocker Trust went bust, and JP Morgan had to personally guarantee the banking system along with John D. Rockefeller. And then he magically got to buy, because of the 1907 Trust Act, these assets for pennies on the dollar, and so much for the competition. So again, what's happening now? A bunch of these small banks that serve entrepreneurs and crypto suddenly get big, right? Second, third largest banks or 4th, 5th largest banks in the country. So JP Morgan gets pissed off because now they're real competition. So what happens? Now, again, it wasn't JP Morgan this time, but somebody or some buddies spread a rumor that these banks were in trouble. And unlike the old days where they had to physically be a run, like I had to get out of the office, go in my car, go to the bank, stand in line. Now you just push a button. $42 billion vanishes from Silicon Valley Bank on a Friday, and they're bust. And on Sunday, they get taken over. Okay. Then it happens with Signature Bank. Then it happens. No, Silvergate was first, then Signature Bank, and Silicon Valley Bank. And like, and then the last one was First Republic. And like, okay, well, wait a second. Well, who bought First Republic? Oh, JP Morgan.
Bitcoin has experienced significant price fluctuations, dropping from its peak of $60,000 to a low of $27,000 and further declining to $15,000 during the FTX incident. However, this turbulent trajectory has formed a distinctive inverse head and shoulders pattern at $27,000, which is a classic technical signal indicating a potential bullish reversal and the possibility of a major breakout. Mark Yusko emphasizes that despite the global financial crisis, Bitcoin has been the best performing asset, surpassing the performance of gold, which is struggling to maintain its position. Yusko also expresses his concerns about central bank digital currencies and warns against accepting such financial imprisonment.
But what was the Federal Reserve? Okay, the Federal Reserve was a plan to create a federal, not government, but a private corporation. This is the funny thing. The Federal Reserve is neither federal nor has any reserves. Right? It's not a government entity. It's not owned by the government, and it has no reserves. It's not a bank. It is literally a private corporation modeled after what? Modeled after the Bank of England, which is modeled after what? Modeled after the Netherlands National Bank, which was created by the Rothschilds in 1607 to create money out of thin air, to finance wars. So we have this weird dynamic that the Fed exists to steal the wealth of the masses through this thing called inflation. Inflation is not good for us. So what happened? So all of the graft and corruption of the savings and loan crisis and the first banking crisis in the 90s and the second banking crisis, global financial crisis in 2009. So January 3rd, 2009, Bitcoin is born. Now, why was it born on that day? And why is the first image on the Bitcoin blockchain in the Genesis block a photograph of, or JPEG, of the Financial Times, Chancellor on the brink of second bailout for banks? Well, that is, again, a commentary, social commentary on why Bitcoin needed to be created. It needed to give us a way to take our fiat, convert it into something that is no longer inflationary, can't be devalued because there's a finite supply, it's scarce. And that deflationary asset allows us to protect ourselves against this fiat fiasco, which means we can create fiat out of thin air. So fast forward to today, what are the implications? Well, the banks reliquefied themselves. Then these other competitors rose up and they were threatening the guys at the top again. So what do? They foment fear and create a reverse bank run. So all the money flows back up to the top banks. Why? Central bank digital currencies. Well, what's a central bank digital currency? Central bank digital currency is not Bitcoin. It's not Ethereum. A central bank digital currency is a closed, centralized ledger that is a surveillance tool and a control tool. So it's all the worst things about fiat money, inflation oriented, can be devalued by decree, plus programmability and control. I mean, it's a living nightmare and surveillance. And so there's this crazy video by Augustin Carstens. He does this video. He's the head of one of the guys at the BIS. I don't know if he's the head of it. And he says, well, of course, we should control how you use your money. Of course, we should be able to put an expiration date. Imagine that. You get paid for working your ass off, and the money, if you don't spend it by Friday, it goes away. Are you kidding me? I can't save my money. Wow. I have to spend it. Well, why would they want to encourage that? Because consumption is what drives economic growth. It's what drives the money to the top of the pyramid. So here's the thing. Bitcoin has held up, as you said, really well, right? We got the second and third largest bank collapses in history, and Bitcoin's up. Now, if you would have told me 6 months ago that two of the largest banks in America are going to fail, what's going to happen to Bitcoin? Everybody would have said, oh, it'll be down 50%. It'll go to zero. Peter Schiff would have been saying, oh, it'll definitely be zero then. Okay, Peter, here's the thing. Over the last 10 years, gold is down. And Bitcoin's up about 10 years. It's like 850%. So gold is down and Bitcoin's up 850%. So something's, broken in that model. But the money keeps getting worse.
Central bank digital currencies raise concerns due to their ability to track all transactions linked to an individual's identity, and their power to block undesirable monetary behaviors. Unlike cash or decentralized cryptocurrencies, CBDCs could be potentially misused, as exemplified by instances in China. Mark Yusko suggests that this alleged plan could erode confidence in the banking system, leading to a concentration of deposits in government-controlled institutions. In the crypto world, the privacy-focused crypto mixer Tornado Cash experienced an attack on its operations, while Bitcoin payment firm Strike is expanding its app to over 65 countries, offering global payment and cross-border money transfer services. The increased adoption of Bitcoin and the Lightning Network signifies bullish growth. Share your predictions on the price of Bitcoin by the end of the year in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.